Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Technical Analysis. Today is Friday, July 11th, 2014. You're looking at a daily chart of the SPY. Not much happened today. We were in a pretty tight range, which is typical for a Friday. Traded, 64 million shares today, which is relatively light. And let's just take a look at the intraday, and you'll see this is typical for a Friday. Opened down a little bit, shot back up, chopped around all day, float up in the afternoon, which is typical for a Friday. And that's it. Market goes into a snooze fest, and that's the ball game for a typical Friday action. Said it last night, don't expect much. Maybe kind of a flat day to slightly up, and that's what we got, a flat day to slightly up. And there's your S&P. So nothing changes. If we go to a longer term chart, this is the daily. Let's go one more step out to a weekly chart. And you're still in a bullish mode. And, the market's going to have to turn down and give us a signal when it's ready. And it's getting ready, folks. You basically have about another week to get out of some longs that you might have, maybe make some shifts in your 401k, do some things to save yourself the headache over the summer. If the market comes down like I suggest it will, you're looking at best case 10%, worst case you could be looking at a 20% down swipe this year. Okay, and so it just makes sense to protect yourself. If you make some shifts and take a conservative allocation, and I'm wrong, so you shift it back. How much can I be wrong? We'll know I'm wrong shortly, but right now, I believe a big turn is coming, and I think you should act accordingly. That's my analysis, and for the time being, I'm going to stick to it. Let's go look at some indicators. We're not seeing anything material in the SPY to give us any clues, so let's move on and look for clues elsewhere. Let's go over to the IWM. Okay? Now, that doesn't look like the SPY, does it? Now, what do I always say? The IWM, which is the small cap index, small business, right? Russell 2000, okay? It's a market leader on the way up. It's a market leader on the way down, all right? What do we have here? We have a top. Okay, we have a significant down move in comparison to the SPY. Okay, same daily chart. That's not even close, folks. So here would take a clue from the IWM. Whoops, wrong signal. Symbol. Okay, not even close, folks. So if you look at the IWM, you say, all right, well, if this is a leading indicator, is it telling me something? Well, maybe. This is one of my indicators, all right? This is the common sense part of it. Here's a weekly chart. And what do you have? A big down week, all right? What are you going to have next week? Probably a sideways week. Let's say you have a sideways week, all right? This would be setting up for a bearish pattern. Well, let's move on. Let's go farther. Let's look at the NASDAQ. We'll look at the Qs, okay? Bullish market, weekly chart, daily chart. Looks like the S&P. So not much doing there. Not much of a tell, but we certainly want to take note of the IWM. Let's look at another thing, okay? I can't type and talk. It's amazing. XLF, the financial ETF. Okay, now this looks similar to the this looks similar on a daily basis to the S&P, right? Now, if we go out on a weekly basis, all right, looks like the S&P. It's still bullish, right? We're still making new highs, no problems there. Okay, let's go out even farther. All right, well, not so much. All of a sudden, you see huge down move from 2007, all the way to the bottom in 2009, and then you've basically had a float upward. Now let's check something out. Let's do a Fibonacci retracement, and let's see what we find. All right, that's pretty close. 50% retracement. All right, We're going to stall out on the 50% retracement, or are we going to go up to 618? This is a monthly chart, so it doesn't necessarily tag it once and go down. This is, it could chop around here for a while and fail here, or it could go all the way up to, $25.78 to $26 at the 618 and retrace from there. So we'll see. It's just another tell. I'm just giving you some of the common sense technical tools of the trade that I use. And what else did I want to talk about? You know what else I want to talk about? I want to talk about Amazon. Why do I want to talk about Amazon? Where do I have Amazon? Here we go. Okay, Amazon. The reason I want to talk about Amazon, well, I just gave up the goat here. I wanted to start with the daily chart, and I wanted to show you that today, okay, we had a nice big up move, and the story this morning was that Amazon had, I think they said 30% increase in what they call same store sales year over year. In their case, it's same store or same online sales year over year. Nevertheless, that's fantastic for Amazon. They're obviously growing revenue. Profits are another story, but we're not here to judge that. We're just here to look at the charts. And what do you have here? I always talk about market symmetry. I know we talked about it last night. I talk about it all the time. Market symmetry. Up move, sideways consolidation, up move. That's market symmetry, right? We had a long sideways consolidation on the daily chart. So this may not be done yet, this up move. But let's take a look at something one more time. Let's look at a Fibonacci retracement and see how this works out. All right? What do you know? We just came into the 618 retracement today. All right? It was like a magnet. The stock went right up into this is not an accident, folks. This is symmetry working at its finest. Fibonacci retracement levels work. This is picture perfect right here. You have a down move, and then you have a retracement right into the 618. We'll see what happens from here. Let's remove this. Let's go to the weekly chart and see what else we see. And the reason I want to bring this up, because this is a leading momentum stock, right? This is not pretty. You have a high, a lower high. You're setting up for a lower high. Okay, on the weekly chart, you're going to see the same Fibonacci retracement, right? Look at this. Okay, right into the 50% retracement on a weekly chart today. I mean, is that picture perfect, folks? This stuff's not an accident. It works. Okay, so these are some of the things. This is the common sense part again. I'm looking at momentum stocks. I noticed this. Amazon's up big today. You want to find out, what's going on. And lo and behold, in my mind, it's not really up big because their sales year over year were increased by 30%. In my mind, it was up big because that was an excuse, and it was going to the 618 on the daily and 50% on the weekly. And let's go back to the monthly chart that I showed you first, and let's go to the monthly and check it out. Look what we have. We have a bottom. We have 1, 2, 3 months up. Okay, what's going to happen on the next month? All right. Well, we'll see. This is a high. It could be making a lower high. Another low. I could consider this a lower high. Could be a third lower high. Where are we? Fibonacci retracement. By the way, I didn't do this. I'm doing this for the first time in front of you. Okay, can I get it to stop? Close enough. 50% retracement, monthly chart. Not an accident, folks. This stuff works. It works. Okay, so you know what? I kind of spent a lot of time on the market and some stocks, and the reason is because you need to be aware. You need to protect your money. If you have money in the market, you need to protect it. Write calls, buy puts, sell the stocks, do something. You have to do something. Buy some inverse funds, SDS, or things like that are inverse the stock market. So SDS is 2 times inverse the S&P. SH is 1 times inverse the S&P. So you do things like that. You have to protect yourself, folks. You don't have that much time left. When the market starts down, it could get very violent very fast, okay? And let's just go over real quick and take a look at the gold market. Not much changed since last night, so I'm not going to spend a lot of time on it. This is the monthly chart. on the daily chart, you're still in a strong bullish market here. I still think there's another low. I think we're going to have much higher prices, but I think we're going to have another low first. So I'm staying with my tune in the gold market. Not much has changed since yesterday. I would rather buy it down here. So I'm going to be patient in the gold market. I think right now your upside is limited to like 130, 130 and a half. And right there, I don't really want to get in front of that now. And then if we get there, we'll pull back. So I don't need to be there. I'm going to be patient. I've done this before. It looks like I'm wrong until I'm right. So we'll see what happens. USO today. Let's talk about USO today because this is a good lesson learned. So nobody typically talks about their losing trades. So I want to talk about a losing trade. Guess what? We were in USO yesterday. Okay. And it became a losing trade. So here's what happened. I saw USO, I saw an opportunity, okay? I saw an opportunity in USO, and all the signals that I normally get lined up. This chart's not even over there. This is what happened. So I issued a trade alert, actually it was 2 nights ago, and I said if USO opens down in the morning and it doesn't close below 37.21, you can buy it, okay? And basically, I bought it. A lot of members bought it around 37, 58, 59. Actually, 58 was the low of the day, and a lot of the low of the day was right here, 37, 58 and a half. Okay, I bought it at 37.62, and a lot of members got it in the 60s also. So here's what happened. It reversed and went up that day, okay, on Wednesday. And I thought it was a winning trade. It just did exactly what it was supposed to do. It did what the chart was telling me it was going to do. It did what the analysis, the number crunching, everything lined up. That's when we take a trade, when the probabilities are in our favor. So what happened was, felt good about it on Thursday, and we finished in the money by like 30 cents, okay? Then all of a sudden today, it opens down and it keeps going down all day, and it closed below 37.21, which was my stop out price, okay? So I advise the members stop out of the trade. And here's why. It may reverse back up on Monday. It could have been a one-day anomaly. But you know what? You get humbled in this business one too many times. You learn. You abide by your stops. We're playing with real money here, folks. We're not playing at all. This is a business of using our money to make money. And what happens is, if all the chart patterns and the analysis line up and they tell us to take a trade, it can still be wrong. The market is always right. We can be wrong. Okay, the market is never wrong. So recognizing when you're wrong and losing small is the idea. So what did we do? Lost about 40 cents on the trade today. Okay, it's 1%. And I don't like to lose. Nobody likes to lose. But you know what? I'd rather lose 1% than 5% or 10%. I'm not willing to do that when I have an out. I had a tight stop. Okay. I thought I thought oil was going to go higher. I still think it may go higher. But you know what? The trade wasn't working the way it was intended to work. So we're out. And that's the way you play it. You have to be a disciplined trader. And you know what? On that lesson tonight, I'm going to leave it be. And, this is David Frost, Common Sense Technical Analysis. We'll see you on the charts, folks.